I started this week with a macroeconomic note, and it was specifically about US household debt. There's a pretty scary story out there right now, which is that US household debt and its various components are at or near record levels. And all of that is true. And interest rates are higher now than they have been in the past, which is also, of course, true. And so you can infer that there must be this impending doom in front of us as all this debt has grown so much, it's become much more expensive to service. The problem with that story is it doesn't include the other half of the equation, which is the asset side of the balance sheet. US households also have record asset levels, and as a result, net worths are at or near record levels. So it's not that something bad can't happen. Of course, when you introduce leverage like this and when interest rates go up, so the price of that debt goes up, you can imagine we're introducing distortions that may have consequences. It's a very easy story, though, to tell, again, that we're facing this impending doom, and nothing in the data suggests that that's the case. I've just seen enough of these kind of macroeconomic stories that so easily lend themselves to cataclysmic conclusions, and how often they don't happen, that I'm innately skeptical of those kinds of conclusions. Like I remember an analysis of the US labor market about a year ago, and it was showing that yes, while the labor market's still strong today, there's all these signs that are building that will almost certainly have a labor market catastrophe starting March, April, May of 2023. And of course, nothing like that has materialized. And it's not that people are trying to mislead anyone. It's just that macroeconomics is so complex. We're dealing with the most complex of complex systems that pulling aside one data set or two, there's really no confidence you can have that you can draw really strong conclusions about doom focused scenarios, right? There's so many different things that can unfold. And with U.S. household debt, there's also U.S. household assets that balance that directly. And so, long story short, not anything to think that there's reason to be unduly scared about. Something, some kinds of distortions may manifest that we have to work our way through, but I don't see a doom-based scenario there. My next two posts were all about U.S. solar stocks, and I specifically dove into Enphase Energy, which is a manufacturer of components that go into solar panels. And I showed that in the first post, we looked at all per share metrics of Enphase. And it's trading at a 52-week low. And I showed that it's basically the best value that it's been coming out of the pandemic. Relative to the yield you can get on US Treasuries, it's the best bargain the stock price has been. And we see the earnings per share is up and has continued to climb year after year. And so there's a lot of reasons to think, okay, there's a real bargain here. Why is it trading at 52-week lows? And my argument is that investors are going to see some of this. There's natural fears around the macroeconomic environment and supply chain disruptions and price inflation and all the rest. The company is clearly demonstrating that it can perform. So I will not be surprised if it's able to climb off these 52-week lows before long, given what we're seeing, both in terms of its per share earnings, but also its relative valuation and attractiveness relative to interest rates. My second post in that same series was diving into Enphase Energy, but rather than looking at just the per share metrics, we looked at the whole company's performance. We looked at revenue, we looked at operating margin, we looked at returns on capital employed. All of these things are moving up as you go through time. So it's not just like there's some exotic financial engineering that's going on that's making the per share stuff look more attractive. No, the company on the whole is performing stronger today than it did a year ago, and it was stronger then than it was a year before that. So while there may be some near-term hiccups, there is a solar boom that's unfolding both in the US and globally, certainly in the developed world. And so Enphase Energy is positioned to ride that wave. I think this is one of those cases where investors are probably paying too much attention to short-term headwinds and not enough to the longer-term tailwinds that should carry Enphase Energy and solar stocks generally up higher from here. So that whole sector is battling some valuation issues. And my point was just looking at the data, it sure seems like that sector should find some relief sooner rather than later. My next post was about the transformation of the US power grid. We got new data from the US EIA this week and I specifically pulled out new additions to the power generation capacity and new retirements from the power generation capacity. And we see that over the past 12 months, we've added 14 gigawatts of solar power generation. We've added 7 gigawatts of wind and 3 gigawatts of natural gas. Those are the three that are all climbing. Coal continues to just erode, and more capacity comes out of that almost every single month. And my point was, we are seeing the power grid transform under our feet in the direction of solar and wind primarily, a little bit of growth out of natural gas, a lot of recession coming out of the coal side of the equation. The secondary observation there was just how much solar is picking up, and both wind and natural gas, the rate of additions are coming down for both of those technologies. So I think some of that is supply chain stuff that we're seeing, but still, it's interesting that even all the stuff that's going on at a macro level, solar is still booming, which is part of the story that I've gotten into in the two prior posts about Enphase. I closed the week by posting on U.S. oil rigs, and we saw yet another week of oil rig declines. And U.S. oil rig counts have gone down over 100 rigs over the past year. And so what that means is I pulled that data, I lined it up against changes in U.S. oil prices, and I showed that U.S. oil prices are still down relative to where they were a year ago. And typically, before you see any U.S. oil rig counts go up, you see year-over-year oil prices having gone up. And typically that lag is like 6 months. So we've not even seen the oil prices go up on a year-over-year basis. We typically need to wait about 6 months after that to get meaningful oil rig growth in the US. And so my point was just, I don't see an imminent recovery in US oil rig activity, and it's something that will probably need to wait at least until the second quarter of 2024. As always, this time could be different. I'm just relying on a lot of historical data sets to help make those observations, but I'm also just not seeing anything immediately in any of the data sets or in any of the corporate results that we're getting that indicate there's going to be, again, meaningful growth in the US oil rig sector in the immediate future. At the end of each week, on the weekend, I send out a free weekly energy transition newsletter. It includes links to and summaries of all of the research that I post during the week. I also include an energy-related anecdote, insight, or observation. This week, I wrote about U.S. energy efficiency. We got a new report, an energy efficiency scorecard, specifically of U.S. utilities. And my anecdote was about how energy efficiency is kind of obviously important in the sense that it attacks the challenges that we're facing around energy security and energy equity and environmental sustainability. But it's a topic that often gets short shrift, and certainly relative to the very provocative debates that go on around the technologies that we might be able to deploy over the course of the transition. Energy efficiency is just something that doesn't get a whole lot of visibility. My note was about sort of the shame of that being the case and me arguing for how important energy efficiency actually is. So if that way, if you sign up for the newsletter, you will get that kind of anecdote. I write a different one each week. And it's not anything that I share anywhere else. I only include it in the newsletter. So you'll always have something new to read in the newsletter, totally free. I'll put a link either in this post or the comment below. I really appreciate you listening, reading, watching, commenting, all the rest. Hope you had a great week, and we'll talk soon.